Everyone's got their own way of charting, but this is exactly how I chart. I'll break it down step by step, my bias, how I mark my levels, and how I confirm entries by using my order blocks. By the end, you should be able to understand how I think behind every move, not just what I draw. So before I even mark a single level, what I do is I look for bias. That's going to be the most important part. So are we looking to go long or short? First off, we're bearish ever since right here on the daily. And the daily is a very important time frame. 4 hour, yeah, we were kind of bullish in the market opened, or even before market open, yeah, we were very bearish. 2 hour, we're kind of bearish, and a 1 hour. So I don't just force a bias. I mean, if structure's gonna be messy, I'll wait. But this time I was able to tell. And the reason why I do this is I want to trade with momentum, not against it. Because once bias is set, it's just much easier to get a big move. I'm only looking for a setup that aligns with me. So the next thing I do is mark my levels. So like I'll go on the daily and let's do NQ as example. This is our high. Okay. This is our low. We might get a new low soon, but that one's good for now. Okay. And this level it kind of tells me if price approaches it, are we going to reject it or are we going to break through? If we reject it, that means we're even more bearish. If we kind of bounce off it, that means okay, it could possibly be headed towards anywhere from here or right there to here. And that's what guides my setups. I don't just chase candles. I use my levels, and next I'll show you how I use my order blocks. So now that we got that set, I go on the 1 hour, draw my order blocks. So first one right here. Another one right there. Okay. Now go on the 15-minute, and I was gonna show you something as we kind of close below. Boom, and then we touched the block right there, then went down, and we actually touched the low of day. That was a perfect setup. And if you guys are wondering like what an order block is, it's basically the last bullish or bearish candle before a big move. Like, I think I've explained this before, but like, look, big candle, it's in the middle, and then bearish move after. Or middle candle, bullish move after. And that's my high probability entry zone. Of course, not everyone's gonna be valid. I only use the ones that I feel that were respected. So, like, this one's respected. For longs and shorts, I mean, look at that. I know I've talked about my entry, but like I said, it closed below. We kind of touched it, then we went down. Stop loss could have been at the top, and you would have gotten a solid 120 points as your full target. So now that I got all three of those things down, here's how I incorporate it. So I have my low of the day right here, and I kind of want to short below it, so that could be right here. I wait for a close below here, and then I would go short at 477 or 468, and it's already below this level, so that makes me confident in my setup right there. Now occasionally, like, I will add other confluences like the squeeze momentum indicator, but that's rare. That's only sometimes. It's this one. Yeah, it's this one right here. It even tells us that we're bearish, which I've confirmed on the daily. Um, if you go on the 4 hour, it's not really accurate because we're literally saying we're bullish, yet we're clearly bearish from here. But I only use it occasionally, like on the 5 minute. On the 5 minute and or 1 minute and 5 minute and 15 minute, it's bearish. So once we go below here, especially below here, I'll be looking to short. And I do this pre-market. I don't wait till the market opens. I do this pre-market. It makes it easier to see where the market's headed, where it's going, and you get a clear idea of what's going to happen.